welcome to the weekend market review. It is February 3rd, 2024, first weekend review of February. Here we go. Let's jump right into it. TLT, what the market gave on Wednesday, Thursday, the market took back on Friday because of the econ data. Not a surprise. I took the opportunity on Wednesday and Thursday to sell 13 cover calls on my position from 98 to 100. Thankfully, I did that, and I got anywhere from 60 to 15 cents and more for all those calls. So it is what it is. It's a trading range. Let me repeat for the upteen time. Whatever you want to think about the Fed is having mixed signal. 1 week is bad. Sometimes one day is bad. Next day it's good. Can't have that. Okay. The employment data was too strong. The day before that, jobless claim was high. The madness of the data that the Fed put out is pure lunacy. On Wednesday, jobless claim, continuous claim was higher than expected. And then on Friday, booming job market, low unemployment. You figure that out. You put that two and two together. If that makes any sense, I already made a video last month to point out that a lot of what they put out are pure nonsense. Survey. I can't believe that we are living in 2024 and many of the economic data that the government put out on a daily basis are from survey. People with pen and pencil and tablets and clipboards, surveys. Maddening. Not much to say outside of TLT. If econ data is mixed and we have short-term knee-jerk reaction from some banks failure or banks in trouble, then you can either sell outright, sell cover calls, but take advantage of the volatility. All right, it is what it is. If I already made a video many times showing how TLT behaved in 2008, swinging from a wide range of like mid 80s to upper 90s. So this is not new. Okay, this is not new. What's going on here with mixed data is not new. If you are new to the market, get used to it. Learn to trade the mixed news. Okay. All right, let's jump right into it. I did short DIA. Right now, the trade is pretty much not making money, but that's okay. I have until March 2nd. Plenty of time. But right here, right now, I like my chances. DIA. Okay, already DIA. Remember I talked about how SPY too risky to short? Well, guess what? That was the right play. Stay out. Stay out of trying to be short. Let it go until it break down or hit the top range. Not much for us to do. QQQ, same thing. That was a smart thing to do. All right, so trust the TA. Since we talked about QQQ, let's jump right into the topic of the day yesterday, Meta. I can tell you, in my 20 plus years of active participant, I have bought my first stock, as I mentioned, 40 years ago. It's insane to think that I bought my first stock 40 years ago, but really I didn't do anything for the first 20 years outside of that one purchase. I began to be more actively involved in the market in 2000. Well, I would say 1999 onward. I have never seen something like this. Have I seen stock that jump 30%, 40%, 50%? Absolutely. But they are small stock, micro cap, small cap, even mid cap. We have never have in the history that I can remember. I'm sure if anybody out there that can think of something else outside of Nvidia that we saw before last year, this is unprecedented. This is the most insane $1 trillion kind of company move that we have ever seen. Breathtaking. I have exited all of my trading share that I bought back in October, right here. For those that follow me a long time, you know I did. I have a long-term share that I held on the whole way. I did trim, and then at this point here, I said no more trimming. I'm holding on for the rest for long term. And then I start to buy the dip, buy the dip, buy the dip, and at this point here, I almost double up my position from what I had back here. And then I start to trim, add back. There was plenty of trade for those that follow me. Okay, plenty of trade in and out, in and out. But wow, what a run. Okay, what a run. 50% return, insane. Absolute insanity. All right. So now what? The big question is now what? Right? No doubt this is what many people, many traders would consider a professional gap. All right. It's a kind of gap that squeeze every short there is. Everyone that was short until Thursday, obliterated. Right? You can't have a stock jump 30% or more and not crush the short. And on this magnitude, all right, there was $10 billion worth of short on Meta last week. I can guarantee you, yesterday, every single one of the short position got hurt badly. Okay. Oh my God. Incineration. Okay. Oh, now what? The question is, was I believe 482. If I need to go back and check, but I believe the last sales I had was something that crazy. 482. Yeah, that was the last share I had as far as my trading share. Would I buy into it right now? No. Let's revisit many big gap up to take the lesson from the past to see what you and I can do. This is a new phase for Meta. Okay, look, the last time, you see this? There will be a slight pullback. How much? I don't know. Could it be 5%, 10%? It's not going to fill the gap, okay? Because this is a professional gap. Professional gap, in my opinion, is like when big money, when big change, when catalyst, the narrative, the backstory, the future of the company change, where the big boys, big money are doing a 180. So that's why all the short got blown out. Okay, the narrative change, professional gap, but there will be some because it usually attract new shorts, right? So there'll be some profit taking pressure, new short pressures. So I do believe last time we had a big move from 210 to 238. That's big. Okay, it's not 35% move, but it's still over 20% move or 20% move. That's big back then. It did pull back. So you got 240, right? It jumped to 240. Guess what? It gave back roughly 5%-ish, right? It happened. It happened before. You know, if you look at Nvidia, same thing. Sure, did I miss out on Nvidia for the most part? Yes. I didn't have much. My son account did. That's why he had a great performance last year, 40+%. But I didn't, not in my account. And guess what? I missed this move, right? But guess what? There are pullbacks, however slim. That's another example of a professional gap up, right? And then eventually it tested the low of the gap up there, but that is it. So there will be chances to buy back into Meta or buy back into Meta. Just gotta be patient, okay? Just gotta be patient. So what does that mean? Back to Meta. Is there a chance that you and I can buy it in the 450 below 460 range? Likely in the next 5 days. Sometime next week, there could be a pullback. Would I buy at 460? Yeah, I would buy back from 460 down to 450 on the share that I sell from 470 to 482. Easy decision to make, okay, for me, no doubt about that. Sure, I sold after our pre-market in the middle here. Who would have thought after hour, when it was in the 430 to 450 range, that it would open like this, right? Insane, absolute insane. But right now, my play is to be patient and to put in order from what happened again, right? All right, move on to, well, before I go, no doubt I was wrong on Meta. I'm glad I was half wrong when Google announced, right? When Google announced and disappoint the market, I mentioned on Wednesday that I can't understand why Meta would get the ads money or more ads money than Google. That's what the narrative on TV was. A lot of portfolio managers and analysts were saying, oh, you know, so I thought Meta might face the same problem. So where I was half wrong was I thought that way, but I didn't sell any of a Meta share because I'm like, well, maybe they're right. Maybe they know something I don't know. So I held on to my share instead of selling them on Google bad news or disappointment. I wouldn't say bad news. The problem with Google is the number's not bad. It's good. It's just that they are spending a lot of money on AI. They need to catch up to Microsoft. There was the Meta number is cleaner. The only area where it was not good would be, of course, the metaverse. They're still putting in billions and billions into the metaverse, but because all the other metric was so good that a lot of people just ignore the sunk costs into the metaverse. But for Google, it was good, but they spent a lot of money on AI to trying to catch up to Microsoft. That hurt their earning for sure. And advertisement, it was good, double digit year over year. It was off by 1%. That's the thing. When I talk about on Wednesday, I talk about anticipation. Let's go to Google. Let's go to Google. I talk about, oh, why did Google sell off? Well, anticipation. And Google missed the expectation by 1%. Wall Street was expecting and looking for at least 12% growth in advertisement. They came in 11%, and that's what you got. Okay, on top of AI spending, all that stuff, yeah. And expense control not as good as Meta. Meta have better expense control. That's why they blow out all the metrics. So when you meet expectation, not good. Especially if your stock already run up, anticipating good numbers. Amazon, similar situation to Meta. The anticipation was decent, and they have fantastic number. Blowout too. Beat out all the estimate in all major area. And another thing that of course help Amazon is what? What happened? Content. Oh, they benefited. They benefited greatly on not spending billions on crappy content. So that helped. Okay, that helped for sure. So yeah, Amazon, nice move. The question is, same thing here. Trying to put money into Meta on a pullback than chasing Amazon here, because this is top of the channel. It needs to prove to me that it can hold. For now, I don't need to be in Amazon. Okay, Amazon was not. I have a small amount of share in Amazon, and I sold them all yesterday. Um, and I'm, Microsoft, Google, and Meta was my top three, and I remain. They are still my top three for 2024. It's not Max 7 for me. It's Mag 3. All right, but I did. Speaking of not Mac 7, I did buy Apple. All right, I went in and grabbed a bunch of Apple after hour and during pre-market yesterday. Why? The zone. I talk about this in my chat group. It's in the zone, right? When I see below 182, 177, 178, yeah, you betcha, I bought. Not as much as I wanted, but that's okay. I got more than half of what ideally I would like to have exposure there. So I'm fine. Can I add more? Yeah. If I see further pullback for whatever reason, I don't need the reason. Now, what is this zone? Okay, sure, can it break down below the zone? Yeah, it has. Okay, and to me, that would be a good time. I was looking to sell put spread, but I did not. I had a few order in, but they never trigger. So on further weakness, then I will look to sell 170, 165 put spread about. Okay, yes, this zone was a key resistant for late 2022 through most of the first 6-7 months in 2023, and then finally the breakout, and then back into the zone. Very messy here, but then October was very messy. Okay, very messy for many stocks last October, right? We all can attest to that. And then that's where we are now, right? So I don't mind owning Apple here. Apple near 200, crazy, right? Crazy. Let's move on to Tesla. I didn't like it. I tried to sell put all day yesterday, but it didn't trigger. I was trying to sell 160, 155. I have a couple that expired yesterday, which was nice, but I'm looking to sell a little bit lower going forward. We'll see. We'll see how it is, but I'm not surprised that it's dancing around this, because this is a support. Okay, this is a support range, and can it hold? Well, it didn't here. Came back in, check back real quick for a couple of days, and then boom, it's gone. So can this happen? Can this thing dance around for this week, and then boom, it can. But what would be the catalyst? Is there any catalyst for that move? I don't see it. Okay, so I tend to think that the likelihood of a breakdown for Tesla is higher than the likelihood of another move higher, because unless Elon Musk has something in his bag that he's gonna pull out and say, voila, surprise. I don't know what it is. That's why it's a surprise. So I don't know. For now, I tend to think that the path of least resistance is lower for Tesla. I just don't see any good news out there. Okay, so yeah, that's my take on Tesla. Did I cover all the Max 7? Oh, last one, Netflix. Yeah, nothing to do here. Nothing to do. Okay, this is one of those moves. Unlike what I show you on Nvidia and Meta in the past, you can have a gap up, gap and go. Oh my goodness, those are the kind of gap you like to see, right? Gap and go. There's three kind of move, right? On gap up, gap and go, gap and drift back. Those stink. There's nothing that no one like to see that. No one like to see a gap up and then drift back and get back the gap fill. Okay, and then you have the gap sideways kind of move. That's what we like, to have opportunity to buy into the new move. But right here is a gap and go. Netflix have wonderful number as well, and they also have the benefit of expense control in the last second half of last year because of the strike, right? Speaking of strike, well, as far as Netflix, nothing to do there. If you have it, congratulations. For sure, raise your stop at the lowest. You should have it, at the gap up. I rather move it up higher to the low of day, say of the second day, but move up your stop. Set your sell up there, 580. Trim. All right, I think I'm done with Max 7. Well, outside of Nvidia, last one. Last one. 666. Oh, the number of the devil. But I'm content in holding the rest of my share for now. No, nothing to do. Nothing to do here. If you want to protect your gain and put in a stop, low of day Friday. That's a lot of money. So much money that if it check back to the 20 MA, that's a lot. The 20 MA is 590-ish. Do you want to give up $70? Think about it. Think about $70. It's so overextended. It is ludicrous. Okay, it's so overextended. Right? It need to digest. This move need to digest. Just like this big gap up need to digest, and eventually the 20 MA caught up. Right? So it could do the same thing. Can it move sideways? Absolutely. But at the least, raise your stop so that you don't, just in case it did one of the takedown, rug pull for any reason, then at least you locked in and not get you don't lose out on $60 to $70 worth of gain. Insane. Okay, insane, absolutely insane. All right, enough of Max 7. Speaking of strike, UPS. Oh boy. Yeah. Ugly. UPS and FedEx have terrible numbers, terrible guidances. Another one of those confusing economic data, right? Transport is weak, shipment of stuff is weak, but yet consumer are strong. You tell me. I don't get it. I At this point, the data is mixed and it's ugly, but yeah, the number was ugly. They guide down. They laying off 12,000 people for the strike. After the strike, right? They're trying to control expense. Now, would I sell put spread down here? Yeah, I think it's okay, but it's I just don't see a reason for UPS to break out above. If anything, it can drift. Be patient. If you want to buy the share, it might come down to the low. All right. So for me, if I want to sell put spread, do it like 132, 129, go below in case it break to new 52-week low. It can happen, but for sure, I think the confluence at 135 between this downtrend and it's just not okay. Not something I like. FedEx, yeah, it was insane. This move was insane. See, this is another one of those anticipation, right? And then earning came out, bad numbers, guide down, face rip, right? This is no matter what. Okay, if you see this kind of move, anticipation into earning, you got to trim a little bit. Okay, you got to be cautious. It's rare to have a meta moment where you anticipate and then blow out. More often, it's anticipation and give back. Okay, so no, no, it's an absolute no as far as FedEx. The transport ETF in general, no, absolutely no. Okay, if anything, I might even do a bear spread. I've been looking at this thing. I'm just like, really? With FedEx, UPS, no. I will look into. I had this alert set for a while. It had been one top, two top. Yeah, it's flirting with trying to break out, and we'll see. Okay, when that alert go off, see that alert is set. The 52-week high is up there. Okay, well, not 52-week high, multi-year high is up there at 280. So I'm patient on this short potential, but because it's looking to break out on some nonsense, I am more inclined to go against it. Let's talk about banks. First up, KRE. Yeah, I think, well, if you listen to me, you would get out, right? You get plenty of chances to get out of 52 and higher. Plenty. Now what? I think the safer play now is sell puts, or if you want to own it again, you can do naked put, say 44, right? To me, that's a decent area to sell naked if you're willing to own the share at 44. Okay, can you do it 45 if you wish? But to me, I'd rather do 44 because I'd rather just get the premium and do nothing. But yeah, not surprised there at all. I was trying to buy Schwab. I trying to sell put spread for Schwab at 59 and 58. The order just didn't go through. But what but my order was a little bit low. I had ordered in to buy at 60. I was lowballing it and it didn't trigger. But I leave those orders there because I think buying Schwab in this zone here is a good play, as well as trying to sell naked put either at if I sell naked put for Schwab, it would be 58. Okay, I want to use a 200 and a 100-day MA as my protection. But hey, if I get lunch money doing that, I wouldn't mind. I wouldn't mind outright owning 100 share of Schwab with a cost basis below 58. Okay, that's my thing on the financial. Goldman Sachs, nothing to do here. bouncing around the top range. No thanks. Morgan Stanley, same thing, nothing to do here, not touching it. JPM, same thing here, nothing here now. The one bear spread I have, COF, it was looking good until yesterday. Of course, not a surprise, but that's okay. I have time. I have time. I will leave it there. I put this alert right here at 131. That's where I will cover. If there is any kind of weakness in the financial and COF come down and trigger this 131 alert, I will then cover my bear spread. Okay, that's why it's there. Let's see. Let's move on to Pharma. Eli Lilly, nice move. I trim again. Right. Nothing adding here. I'm trimming. I'm content to be even all out on Eli Lilly. If it get anywhere near that top range of 718, 719, you betcha. Okay. Earnings coming up. Earnings coming up. It could be crazy. So I'm ready to pull the trigger to trim even more. Because the competitor NBO, Novo, came out with earnings, big spike up, and kind of go sideways right now. And that's fine. The same thing can happen to Eli Lilly. Okay, it can get up there. Let me see how well this chart look. Why would you look at that? What do you think? You think it was random that it went up there and okay, so yeah, I would not touch it here. Let's go back to LLY. Yeah, see, to me, can we get a big gap up move? Insanity, yeah. 720-ish, yeah. Would that be nice? Think about that. You're talking about a 9% move. Yeah. It's crazy, but it's not that crazy, right? 9% seems like a crazy number. You think so? Yeah. But it's not crazy like Meta 30%, right? Insane. Absolutely insane. GSK. I'm liking what I'm seeing. Sure. Did I sell here after this constipation here? Yes, I did. Because that's the zone. And for a week or two, it seemed like the right thing to do. And then earning came out and it was pretty darn good. So now let's not get too excited yet. It could be a failed breakout back into the zone and then down, right? So I'm watching it carefully. I'm watching it carefully to see if it would be a new zone, because if it can break out and stay above, yeah, okay, yeah, it can. Okay, so I'm watching it. Okay, that's the key. I'm watching it. There is no it's no rush to get back into it. Okay, but if there is a check back and hold. Okay, so I want to see if there is sideways consolidation this week and it's hold above 40, I might go in and buy, because there could be another 10% plus move from 40 to 46. Yeah, that could be a 15% move into that new upper range, right? So we'll see. Speaking of that, same thing with FV. Okay, FV. Same thing here, right? We test the zone. We get back. That was a smart thing to do, right? And then earning come out and boom, boom. Now, it's kind of a weak close, right? Because look, when you went up to 172 and then you gave back almost all of it, the good thing is it's still close above the zone. It need to consolidate a couple days to show that this is the real move. One day is not enough, okay? It could be a failed breakout, right? So give it a couple days, give it a couple days. But if this thing is a real deal, right? The next, of course, not that far away. You're talking 176, but then there could be rare air above, okay? If it can clear that, look, it kind of line up perfectly. 175. Let's do this. 175.91. Look at that. Okay. It lined up right there with the other trend line. So yeah. And if you break that, then rare air. Okay, rare air above. Nice, very nice, right? And this is one of those W pattern that you normally don't see often, but yeah, it could be move. It could be. I see. For me, what I like to see is, of course, a little consolidation, a little check back to prove that this is the new support, and then I'm gonna go enter into trade, and then I think it could be a measure move, to the 190-ish range, could be even 200. Yeah, it sounds crazy, but that's how TA works. Okay. Let's see what other CRISPR. Anytime below 62, right? Every time it get below 62, I sold 57. I did that again. I got a couple expiring yesterday, and I keep reloading, keep revisiting. Okay, I've been doing it consistently now since December. Just keep playing that range. Okay, keep playing that range. Eventually, the 200 and the 100 will come up into that range to give you good support. But for now, order went off. I actually own twice the amount of MDGL at this moment compared to this moment. Okay, it was a great run when I bought all the shares and then rolled it up. That was sweet profit. Yeah, and then I have repurchased all those shares and doubled them up. Okay, so yeah, I'm getting a little bit greedy. Alrighty, let's any more on well, of course we gotta take a look at Pfizer. Still hot garbage, right? Nothing but hot garbage. All right, I'm done with this. DGX. I'm glad I was patient. I nibble a little bit on this up here. Not sure if this would hold. It didn't. I didn't bother to set a stop. I put in a fairly big order down here, and I've been nibbling yesterday as well below 125. Yeah. So I'm right now I'm sitting on 100 share exactly, and my average is right around 125. Not bad at all. I'm glad I've listened to my mentor, who told me at the end of the year that I should trust the chart, trust my eyes, and buy big where the support is, instead of trying to catch the falling knife, as he said it. I have two naked puts here at 120. That's how much I like DGX. Okay, I like DGX a lot. I have traded DGX forever, as you can see. Okay, 120. Yeah. Okay, so bring it. I will take 300 share, please. Alex, give me 300, please. I can swallow 200 shares down there and be patient. Sure, can it break below? Yes, it can. It has done that before. Okay, but trust the TA. The competitive LH, not as attractive. I'm all out there and I'm not buying back in. Now that I am building a decent position in DGX, there is no need to have exposure in LH for me. But if you like to trade LH, be patient. They will have earning. And I don't imagine that earning will be different than DGX. It could come down, okay? So just be patient there. All right, let's move on to Med Device. Abbott. It's the least favorite of the three that I own because it's near a top range, okay? This is the zone. We are in the zone, okay? The zone of profit taking. Can it break out? Maybe, but let's draw the zone. You know me. I love to draw the zone, okay? I love to draw the zone. Where should we draw the zone? I think right here is a good area to draw the zone. Okay, like I said, the zone. The zone is not a magical thing. It's a real thing. It's obvious. It's very obvious. After I extend, I show you. Look. See? I didn't draw it for a long time, but I saw it. But now I draw it in there for you. Okay? Look. Support. Support. Break. Get back. Check back. Support. Support. Dance around. Failure. Resistant. 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 Okay? So that's why I said it's the least favorite of my three. I own two other ones, Medtronic and Edwards Science. There's a reason why ABT is all gone, right? I don't like it here. I sold it all, 113-ish. I sold some up here, and then I have a stop, and it kicked in. Well, at first the stop didn't kick in because, of course, the gap down, and then I wait for it to bounce back, and then I get out. Okay, so for me, if you have it, consider trimming in the 115 range. Yes, you should. You should, right? Now, Medtronic. I have more. I have the most, right now, I have the most exposure to Medtronic because I trim the least. I trim more at EW. So for me, I have more trimming going on, order up here, okay? Anything in the 91, yeah, you betcha. You betcha. It's gotta go, okay? It's gonna go. How far? How far? How far can this go? It's at, right now, it's dancing around the 100 weekly moving average, yeah? Yeah. Can it get to 99, 98, 99? Yeah, that's the ultimate spot to GTFO, okay? Look, that was an area where, it was support and then it break down. It had not returned to this area in 2 years, okay? So you betcha there's gonna be a lot of people that held on to this thing for 2 years or longer and saying, get me out, okay? Can it break out above? Absolutely, okay? If all those sellers are gone, then it can break the resistance. I'm not saying that, once you get there, it's a sure sell, but the odds are you should sell it, okay? Speaking of that, let's go back to something that I said GTFO. Amgen break out. Now what? Okay, now what? The question is, now what? It's just 1 or 2 days. Let's see if this is a real deal, okay? If it's a real deal, but look, okay, it's meeting another resistance, okay? So if you have it still, let me change this so that you can see it. Okay, bang, bang. Okay, it's there. Could this be the end of the move and back down we go? It could, but I said it's GTFO at 310, and if you didn't listen to me and you stay greedy, you get yourself another 15 bucks. Congratulations. All right, let's get back to EW. EW, what a move. No complaint from me. But look where it is right now. Yeah, we are teetering at the high of the gap down. Yeah, a nice move. I have no complaint here. Okay, trust me. For those that know me, I have EW for a long time. I bought plenty. I rolled this. I trim, and I didn't trim enough, and then I got caught in this ugly, nasty move last October on a tax sell-off. But yeah, I didn't make the second mistake this time. But if you didn't sell or plan to sell, yeah, you need to trim 87. Okay, my next order to trim is 87.25, and then of course the gap fill 91. Okay, but between 87 and 91.5, yeah, come on, right? Gotta do it. Gotta do it. Okay, it's don't take the gift from the horse mouth or whatever that old saying is, right? It was nice. It was ugly. It was a lot of pain. Take the gift, right? Take the gift. Um, what else can I do before I go? Do I want to talk about energy? Yeah, why not? Let's talk about oil. I did not short oil yet. I try. Trust me, I try. But I keep, I right here, I was waiting. I had this alert set for 74, right? Because I was thinking, yeah, it's gonna get there. But then, see, this is another one of those situations where it's mixed. Oil is weak, even even with the trouble in the Middle East, right? So strong economy. This is not a kind of move that you see in a strong economy, right? So yeah, if you got in a short, congratulations. But yeah, it was so tempting. To me, that was the right thing to do. I talk about it. I just was a tad too greedy, trying to wait for it to get to 74. But yeah, would I cover the short here? Yeah, I would for sure. You know, can it get down to the 65 range? Yeah. I did trim more CVX, no brainer, right? Yeah. What else can I say, right? Yeah. Get out, trim. Sure. Would I like to exit the rest at 156 ish, 155? Yeah. That wouldn't be a bad thing. But no, I'm not buying into it. I'm not buying this. XOM. If you bought in the zone, congratulations. Same thing here. I'm looking to sell up here. 106 area is my exit plan on XOM. Alrighty, last but not least, let's exit on Bitcoin. I haven't done anything. I did not add to my IBIT, and if Bitcoin get anywhere into the 46, 48, 49 range, yeah, I'd be selling my IBIT. Okay, but for now, would I add into the zone? Yeah, if it get back into the zone, I have a stop. Okay, I have a stop set where 23.5. Okay, that's my stop because my cost is below. I still make 5%. Okay, because I bought down here. My cost is below 23. So I'm not gonna give up too much. I don't want to give up too much. I would move up my stop depend on how far IBIT go, how far Bitcoin go. But for now, I'm not adding. If I get, I might get stop out at 23.5 and then buy back at 23. That's the plan. Okay, so I have an order to get stop out at 23. I'll buy back at 20. The stop is 23.5. The buyback is 23 all the way down to 22. Right? So yeah, I will reacquire all those shares lower. Why not? Even on 200 shares, why not? I like to own up to 1,000 shares of IBIT, but for now, it's a small position, far smaller than my 750 share of GBTC that I exited on the pump last month. Anyhow, have a wonderful weekend. As always, I don't cover everything because it's kind of repetitive. If you have any specific question, just post it in the comment and I will try to do a chart for that specific stock the next time I do a stream. All right, bye-bye.